Good evening, everyone. My name is Paul Young. I'm just going to walk you through the international merchandise trade for Canada for the month of March 2016. Now, my presentation is only going to be one perspective merchandise trade. You're more than welcome to go out to different sites from the Bank of Canada to Export Development Corporation to TD Bank to Royal Bank, you name it, to get a different perspective of their view of what the trade stats are actually telling in terms of the economic conditions in Canada. I'm going to look at trade from a different perspective. I'm just going to give you a high level view, and I'm going to give you some indicators, basically what's going on in the economy. But I'm also going to talk about that trade's only one indicator of the economy in Canada. It's not the only indicator. You have to look at other things like housing starts, retail sales, different aspects that drive the economy. You also have, as a business segment, if you're looking at your particular business, you have to if you have a diversified customer base, then you need to understand what that customer base is driving their spending patterns, and those factors come into play both for the macro and the micro indicators. This is a little bit about myself. I have my own YouTube channel. I've also got about 25 years of experience in academia, industry, as well as financial solutions. Now I'm going to talk about summary at a very high level view, and I'm going to tell you what's driving it, and I'm going to give you a provincial summary just to kind of give you an idea what's going across Canada. Now if you look at things in general, now I've averages. You can never look at 1 month when you look at trade stats. You have to look at an average over a period of time, whether that's 2 or 3 months or whatever is available, and compare that to last year's to see where the trend lines are. That's the best way to look at things, because things can go up and down in terms of exports depending on demand for customers. So you need to kind of understand what's going on overall for the last few months. In the last few months we're down a bit. Now that being said, don't panic, because if you look at the bulk of where we've dropped in energy, and we know the problem with energy is right now is that 30% of that is price related. We're seeing that oil prices are still 31% off of where they were last year. Now let's stop there now. Let's look at some of the positive signs. Automobile sales themselves will hit 17 million units in 2016 for the US. So we may have seen a bit of a clawback the last 2 months in terms of exports from auto parts to automobiles to the US, but it's still pretty healthy. So we're still seeing strong there. Forestry is still strong because we're still seeing relatively strong housing starts both in the US and Canada. But this being trade exports, the housing starts in the US are still pretty solid, and that's a good indicator. Consumer spending on average is up, which is not a good indicator. So that means retail sales are relatively strong in the US as well as Canada. So when you start looking at trade and you're looking at the economy, you're starting to see real key indicators here. Machinery and equipment, even though it's up marginally, which shows you that some companies are reinvesting into their businesses by basically automation. That could be robotics, it could be laser welding, any form of automation or new equipment. That seems to be the big issue right now in terms of what's happening. Now let's talk about sector by sector. This report comes from the EDC. So if you look at strong contributors, and this is what's interesting, 3 of the major provinces like Ontario, Nova Scotia, and New Brunswick are all talking energy products. Now let's stop there for that. Some of that could be renewable energy, some of that could be natural gas exports. So that's what you have to kind of look at too. The impact's marginal, but they're still showing you that the energy sector has been strong relatively in some of those provinces. Okay. Now let's look now in other provinces. Now if you look at Manitoba and you look at Saskatchewan, their area of industrial products and materials, that's getting into machinery and equipment areas, and you're starting to see that they're seeing some exports in maybe power generation areas, and that's something to bear in mind. Now look at other areas where you're seeing the weakest contributor. It's not surprised that you see energy in Alberta as well as Newfoundland and basically showing a drop, because those are key contributors to their economy, so that's something to bear in mind. But what you should be looking at here is look at Ontario. Automotive products have dropped from the previous month. Now let's stop there. There's been a reduction in some of the sales for automotive in the US, which means there's less demand for production and less demand for exports. Now we're still on track to produce 17 million units, as I said before, so we'll still see relatively strong areas there. So that's something to bear in mind as you're looking into these stats. Is don't just look at 1 month. You need to kind of look at an average for the past few months. You also have to understand what's going on globally as well as in the Canadian economy. Both globally we're in a period of slow growth. It's been slow growth since 2000 because we've had a demographic shift. We're not seeing the same spending patterns. Second thing is the U.S. economy has been up and down, and it's people don't seem to understand that the last month or two it's kind of had a little bit of a slowdown in retail sales, a little bit of a clawback. Because I think what's happening there, from some of the information I see, there's a big buildup of business inventories. That's something to bear in mind, because if inventory is built up, they're not going to buy new products, and that's where trade comes into play. So you need to understand that too as well. Is maybe as business inventory stabilize a bit, you may see an indicator of what's going on in terms of trade as we move forward. We're still on target to have a solid year for trade, but as I said earlier, trade's only one indicator of the economy. You need to look at other factors like retail sales, housing starts, to get a better understanding of what's going on. Thank you.